Hello, my name is Jose Baezai, and today I'm going to be presenting to you a way to finance your business, a way to finance your deals, and just providing a different method and a different avenue for you to obtain the capital that you're looking for your business. Here we will start by introducing what we do. We provide business lines of credit for any entity, whether it be a nonprofit, whether it be a startup, church, or even a real estate investor. We can do anything from $50,000 up to $150,000. Over the last 6 years, we've been able to fund over $50 million. And let's go ahead and get started. Who we are. We are a small business lending and credit consultants to business owners. We search our local, regional, and national lenders for the credit solutions that best fit your unique business, whether it be looking for capital for short term or looking for capital in the long term. Now, we assist our clients with obtaining lines of credit and cash for their business that do not report to your personal credit. I'm sure you guys will be aware that if you use your personal credit card or any type of personal lending option from the banks and you go over 30%, then it will affect your personal credit score. With these lines of credit, not only can you use 100% of the amount that we provide, but it will not report on your personal credit whatsoever. Now, all of the business lines of credit can be used for any purpose as you start, grow, and expand your business. Currently, we are serving over 65 active clients from all ranges of industry, whether it be real estate investors, entrepreneurs, local business owners, you name it. So we provide free consultation and business evaluation services to all types of business owners with absolutely no upfront cost. Okay? Now, why business credit? And what can it do for you and your business? You definitely want to separate your personal debts from your business debt. That is Finance 101. Now, you want to establish a financial track record. You want to build your business lines profile. So, most importantly, you want to obtain the necessary capital to grow your business. So, getting started. Personal credit versus business credit. Personal credit bureaus and how FICO scores you individually. So with personal credit bureaus such as TransUnion, Equifax, Experian, the FICO scoring system usually works on a debt to credit ratio. Max out will be about 30%. So using 1 to 29% of your credit limit actually strengthens your FICO report. 30% really is the limit that lenders will not extend credit. So just as you can see in this graph, the payment history is usually 35%. The current total debt is 30%. The credit history is only 15%. New credit 10% and inquiries only 10%. So the 3 business credit bureaus. Similar to the personal credit in the businesses and corporations, there's a credit rating system that potential lenders use to determine their credit worthiness. Dun & Bradstreet, or also known as D&B, has been the foremost business credit rating service available. Now used only to analyze and report information on large corporations who did business in other corporations. Now, a lot of the businesses, or should I say a lot of the banks, they're moving away from this and just going towards their personal credit. So it's not as critical as it used to be before. So how the business credit bureaus usually rate your business? It's done through corporate compliance. You know, what type of entity do you set up? The length and type of your business. Do you have a business license? Is your business registered with the 411 directory? Now, again, this has changed a lot, so doesn't play a big part as it used to before. Now, what we offer, as I mentioned earlier, we can give you $50,000 to $150,000 in unsecured credit. It's usually between 7 to 10 business days. Now, step number one is that you would have to fill out a pre-qualification form, and this is a very, very simplistic form. It requires your name, your business information, how much capital are you looking for, do you have any tax liens, any foreclosures, things of that nature. If you do not qualify for our business credit programs, we will not sell you one. We will only be upfront and honest with you the entire time. Now, step two, initial consultations and the lender preparation. Usually it's the pre-qualification step for our lender package that we put together for the clients at no upfront cost. Finally, step three, you apply. Once you go through the step 1 and 2, and we have a 70+ success rate with our clients. We will not submit applications for our clients that do not qualify. Now, having said that, this basically is mentioning that once we approve you, then you are pretty much guaranteed that we will actually give you that amount, okay? Now, all of these are unsecured lines of credit. They won't report to your personal credit, and you can get anywhere from $50,000 to $150,000. Okay? Now, how to obtain cash credit immediately for your business. Now, if you're looking to build your business credit profile, great. But if you are seeking operational capital now, then this is what we will need to qualify. You will need a business entity. Could be a corporation or an LLC as an example. Now, it says here that you do have to be registered with the state for 2 or more years, okay? If you have a startup, we can have self-corp services available at low cost, but this has changed a bit. As a matter of fact, it is no longer necessary for you to establish over 2 years. We can literally have a corporation that was started yesterday and still have great results. Another thing is business entities in good standing. No pending lawsuits, judgments, or liens. There are ways around this, but this is typically what we require or what we request. Now, the business owner does have to have strong personal credit, and usually it's anywhere from 720 and up, and those would be our basic qualifications. So one of the biggest things is that what you will learn in working with us. How to get business credit that never reports to your personal credit. How to structure your business to give yourself a strong corporate image in the eyes of the banker. Learn how a shelf corp can benefit you by giving you the added corporate history when applying for credit. Now, this has changed, so it's no longer necessary, but we will still show you a little bit about how that works. How to get your business credit without using a Dun & Bradstreet profile. Where to acquire $50,000 to $150,000 in business lines of credit at the lowest rates. We always guarantee a minimum of 0% on all of our lines of credit for 6 to 12 months. And how to use legal ways to transfer personal debt over to your business. Conclusion, I want you to contact us. Now that you have a brief outline on business credit, feel free to check us out for more information. You can call our offices or speak with one of our credit consultants to help you in your business. Visit at the website below or link that's attached to this video to learn more about how you can get started in obtaining the capital that you need for your business. Again, we can provide for you anywhere from $50,000 up to $150,000 in unsecured, non-collateral required business capital. All of our lines of credit can be liquidated as cash, and there's many different ways that you can use this to your advantage. So give us a call, contact us, or fill out the form below so that we can contact you with the best solution for your business. Thank you. Have any questions online?
Yes, I'm Daniel. I actually have a few questions.
Okay, go ahead, and then I'm going to repeat your question just so everyone in the room can hear.
Sure. So regarding the 8% application fee, how would that be paid? Can that be paid, for example, let's say that I get a line of credit for $50,000. So that would be a fee for $4,000, and can I pay that fee within the $50,000 that I'm receiving, or how can that be paid out?
Yes. So the question was that for the 8% fee, which we call it an 8% success fee. The reason we call it an 8% success fee is because you'll only get charged the 8% based on the total amount of actual credit that we provide. So having said that, many of our clients actually pay that 8 success fee with the actual credit lines that we provide. You have an option of whether you want to pay it off, out of your own check or out of your own account. But we usually recommend, just taking it off the actual credit lines because it makes much more sense since you're not going to be paying any interest.
Right, and the reason why I chose working with Jose is that when I was researching this business credit lines, there are some who charge a fee upfront, even before they give you the money, and there are a lot of scams out there like that. I said, no way will I pay you $2,000, with the promise of giving me $100,000, right? But they only work on a success fee basis. If they don't deliver, they don't get paid, right? But if they do, what's $8,000 out of $100,000, right? That's better than paying hard money 12%. So.
Yes,
right.
I know that you guys had a question. Are you still following? Mm-hmm. So the question is basically, how long is the loan for, and how is it scheduled? Yeah. So the biggest thing is that this program is not a loan. This program is not a loan, and what that means is that we're not going to provide money to you, and then in the hopes that you'll pay on a monthly basis. What we provide is we're the matchmaker with our banks and our lenders. So what happens is that you'll get the capital from banks like Chase, Citibank. In some cases, it could be private lenders, and we charge the 8% success fee because you go on your own to get these lines of credit is more of a hit and miss. More importantly, it's kind of like going to court. You can either go to court on your own and see if you can get away with whatever you're trying to fix, or you can go with a lawyer that knows the ins and outs. That's why we actually consult you with your credit report first before submitting it to the lender. Because if you have certain things in your credit report and you don't know about, what's going to happen is you apply to a bank and they'll just deny you and they won't tell you why. Now at that point, you just took a hit on your credit report, where if you keep doing that over and over again, you're not going to get money eventually from anywhere because banks are going to be scared because there's a lot of inquiries in your personal credit. Right. We don't require any financials because we do our own underwriting. So that's why we require for you to first submit your credit report with your application so that we can underwrite you on our end before we send you out to our lender.
So pretty much we know exactly what to do. We know exactly what they want to do. So if we look at your credit report, we know right away if they're getting me someone who's making give you money or not. So when you come to us, sorry. Yeah, so like I was saying, the banks we're gonna look at you the same way the banks are gonna look at you, except when you come to us beforehand, we know right away if it's worth taking you to our banks or if it's not. Because if you try to do this on your own, the bank may deny you, but they're not going to tell you why they denied you. They're just going to say, hey, you were denied this. You were denied. Unfortunately, we can't prove it at this time. But if you come to us beforehand and we give you the pre-analysis, we have banks on the East Coast, we have banks on the West Coast, we have banks in the South, we have banks here in the Midwest. We've got relationships with all these banks. We know exactly what all these banks want to see. So when the business owners come to us, we can be the matchmaker. So if you're in the East Coast, we'll match with our East Coast banks. If you're in the West Coast, we'll match with our West Coast banks.
So the terms of the loan,
so the biggest thing is
it becomes dependent on the bank that you guys work with, the lenders.
So to give you an example, if someone has a 750 credit score, they come to us, right? We're going to take them to, let's say, 4 different banks. Each bank approves them for $25,000. It's going to be a line of credit that's going to come as a business credit card format. For the first 6 to 13 months, each of those banks is going to give you 0% interest. Thereafter, the rates are going to vary just like any other credit card, 8.9 to 16.9%. What a lot of our real estate investors do, though, is if you have good credit, the banks will send you what's called balance transfer checks. With these balance transfer checks, since the card is a corporate card, you can write that check to yourself, and you just have to pay a 3% transfer fee. And now you're going to have, let's say $25,000 at 0% for 15, 18 months because you just cashed that balance transfer check. You do pay the 3% transfer, but when you're, adding up the numbers, the 3% to have the 0%, and a lot of our smart real estate investors, and the reason we go to multiple banks is so you don't have all your eggs in one basket. You have 5 different banks who are competing for your business. So if you have a $25,000 balance with this bank and the 0% intro is about to end, well, guess what? One of the other banks we got you approved for is now sending you another 0% transfer offer. So what you're going to do now is you're going to transfer the $25,000 to one of the other banks, pay the 3% fee, and guess what? Now you have 0% for another 15 months. Then you can just transfer back and forth. And it doesn't report to your personal credit, so your personal credit's not affected.
So essentially, the bank guys shop for it, and each of them are the banks that report.
Well, we don't shop for it. We don't shop for it because that would be. We know all of our banks, and we know exactly what they look for. So we match you based on So the question was if we shop our clients around, and what I was explaining is that we don't shop them around because we know which banks we're going to take our clients to based on the strength of their credit. So what we do is we match them based on the strength of their credit, the history, along with what kind of business they have, and what part of the country they're located. And I'm not sure if Jose got to explain this. Over the last 7 years, we've been able to raise $50 million for business owners all across the country.
Is there a preference to the corporate structure, whether it's sole proprietorship, LLC, expat corporate shareholders, investors within the corporation?
That's a good question. So the question was, does a company have to be structured as an S corp, LLC, or C corp? There is no. You can have any kind of entity set up. Obviously, the better ones are going to be if you have an LLC, an S corp, or a sole proprietor. We can still get you financing, but it always looks better if you have an actual corporation. And as far as age of company, we can work with a lot of startups who were just incorporated last month or let's say yesterday, as long as their credit score is stronger. The ones who benefit the most are companies who are a year old, 2 years old, because in the lender's eyes, you look more established. Banks are going to say, oh, you've been someone who's been in business for a long period of time. So these are all the little details that a lot of people don't know before they go to a bank. And then just a fun fact, everybody, 90% of applicants get denied from banks, especially for business finance. Because if your company's making under $2 million or under $2 million, $10 million, you're considered a small business, and they don't really, you're not a big focus for them.
So, I'm sorry, my question is that each lender.
Absolutely.
They're getting different credit cards.
Absolutely. Each bank is going to require an inquiry on your credit to determine if you're worthy of financing. But that's why we have you send us your credit report first and credit check total, to then consult you and say, are you someone who's going to qualify? So obviously, if you don't qualify, we're not going to take you on. We're not going to take you to our clients. But if you do qualify, we'll then take you to each of our lenders, and each bank will inquire your credit report. But we already know you're going to get approved.
800 streams so far on 6 monthly for separation. What's been the loan amount so far?
So the question was, based on if a company has been incorporated for 6 months, what are the loan amounts and how much were we able to get them approved for? It really comes down to the strength of credit, how strong your personal credit is, because if you're a company that just incorporated and your personal credit doesn't really have strong accounts, you're going to qualify for a lot less. You know, if you only have $10,000, if you only have like a $5,000 credit card or on your personal, banks are not going to think you can manage $20,000. But if you're an applicant who comes in and you've got a $20,000 credit card, $15,000 credit card, and your credit card debt is very low, well, guess what? You're someone who's responsible. So no matter if you incorporated 6 months ago, they're going to give you the financing because they know based on your credit history, you're worthy of handling large amounts of money.
And you're getting a loan amount, I think about 50 and 6,000.
Yeah, exactly, 50 to 150,000. We can do less. We try not to go under 20,000 just because it doesn't become worth it at that point. But we can do 25 up to 150,000.
If we work for a partnership, for example, if you have 3 partners, whose score is taken, if so, if the smallest one or the next happens.
Okay, so the question was, how would you raise money with a partnership where there's 3 partners, based on the way we would look at it is we would have each of you guys obtain your credit report and credit check total, and then you send it over to us, and then based on the strength of who has the better credit, we would say use the one who has the better credit. Now, if you're someone who has 3 entities, 3 companies, right? We can raise money for each of those companies within a period of like 6 months. Because keep in mind, the accounts don't report to the personal credit, so we'll be able to take raise the first $100,000 with one of your companies, and raise another $100,000 with another company, and another company, and so on. So you would just
you get so essentially you can apply, one person can apply for per company, and essentially it would be used with the 3 credit scores.
Yeah, so it would just be we would be applying with whoever has the strongest credit. So say you have the strongest credit, we would be applying for you and on behalf of the company.
And then the score is the only one you use because the parameters are the
we use everything. The same thing as the banks. So, say you don't decide to move forward with us for whatever reason, the least you got was you got a good understanding of how the banks are going to look at you. And the biggest thing, too, is people say, well, why can't I do this on my own? The reason being is because when you go to a bank, they don't just offer one product. They offer multiple products. And not only that, but a lot of banks report their business products to your personal credit. So it's not valuable to use those products because the minute you start putting a balance on it, your personal credit starts to get affected. So that's why with everything we do, we make sure nothing reports to the personal side. And then it allows you to build business credit. Yeah, sorry.
All right, so I have 2 questions. First question is that, do you prefer certain names over the others? For instance, if I have Asher's Construction versus, let's say, Asher's Green. So Asher's Construction, obviously it's a construction business. Asher's Green can be anything.
Yeah, no.
Do you prefer certain names over another?
No, that's the question was as far as you.
Good question. We never had that before.
No, the question is if whether your business name will affect how much you get approved for. A few years ago, back like in 2012, we were seeing that was the case because we would have a lot of real estate investors come to us, and their companies would be like, Short Sale Investor LLC or Real Estate Investor Guru. And a few years ago, that would have gotten you more denied. So yes, try to stay away from names that sound like investor, investment, things like that. Just because they might consider you as high risk. But as far as a construction business, that you'll be fine with that. But yeah, it's a good question. It's true.
All right. So second question.
Yes.
So you mentioned that the business has to be like 2 years or older.
It doesn't have to be, but that's what banks do, like to see that.
And I saw on the slide there's like a shelf form.
Yes.
What's the charge for the shelf form that you guys have?
That's a good question. All right, so we don't really offer shelf forms.
Okay.
We did in the past. We did used to offer them. But we found out that it wasn't very, the people who were selling them, there wasn't a big difference as far as buying the shelf corp and using it. A lot of people do tell you, oh, you got to buy a shelf corp. But that's just, anytime people are asking for upfront fees, you got to be careful. They're just trying to make. So we don't offer the shelf corps anymore. We did in the past, but we don't offer them anymore just because they're not. It doesn't make a big difference for the finance. Plus, it requires a lot of paperwork to get it registered with the state that it's not recommended.
Now, what happens if, let's say your credit is not good, but you know someone with good credit? Can you make him an officer of your LLC and then have him qualify?
Absolutely.
Yeah.
So the question was, what happens if you don't have a cosigner, but grandma or mom has an 800 credit score? Yeah, so absolutely. What you would do is you would just add them on as a member, or you would have them fill out what's called the corporate resolution, and you would be giving them authorization to borrow on behalf of the company. And we can, again, since it doesn't report to the guarantor's personal credit, it's valuable as long as you use the money responsibly and pay it back. You're not going to have any issues. But if you're going to be making late payments or defaulting, obviously like any other loan product, you're going to have issues with the guarantee. So, yeah.
And what if the company is not based in Chicago? Let's say I have a company in Las Vegas.
Yeah.
So I have a company in Las Vegas. We're doing some stuff over there. I mean, I'm not bringing that company here to do anything, so I don't need to bring it here.
Nope. We can. The question was, if you're a business owner, you have another company in a different state, we can still raise money for you. I just recently raised $80,000. She was a masseuse. Her business was in Los Angeles. Her mom was in Missouri. Some of the business credit cards went to her mom's address. Some of them went to her business address, and we were able to, to raise the money that way as well. So. No, there's not a restriction. As long as you form filed in Illinois, or you can form file in Illinois, you'll be in good position. Yeah.
That's what you let us see the
Yeah. So the question is, because a lot of real estate investors, in order to protect their properties, they put their properties in a series LLC. As long as each of those series is incorporated in good standing and has an EIN number, we can definitely raise money for each of those each of those companies. We do have a limit of up to 3, just because at 3 companies, Yeah, so it is up to 3 different companies.
You can get millions.
No, of course.
40,000 at the moment.
Yeah. So, and we also have it's an open checkbook line product for business owners who can show receivables. With that, we can actually get you $30,000 to $50,000 in a checkbook line. It doesn't come with 0% interest. The rates do vary between 6 to 12%. For that, you would have to have strong personal credit. We do require documents for that. You have to have good credit, strong credit, receivables, and a balance sheet of your company. So, yeah. So, and like I said, we do get a lot of our majority of our clients have been real estate investors just because they always need money. You always need money. I don't know if you guys are familiar with another group called Renata.
Yeah.
So there's a guy named Bob Tierney. He came through our program 2 years ago. We raised a good amount of money for him. And that's why he went back to Renata to start pushing corporate credit. But remember, those who teach don't do. We do, they teach. So they sell products. They sell I think they do credit repair and all kinds of things like that. We get a lot of people who send us business.
You guys have any other questions?
What can you possibly do with the money?
Well,
or anything else, or just
you can use it for whatever.
That's a good question.
The question was, what can you use the lines of credit for? And the answer is you can use it for, it's really up to you what you use it for. But as long as you have to make sure you just pay the money back. But it is up to you for whatever you use it for. I'll give you an example. So 2 years ago, when properties were a lot cheaper, we would get real estate investors out of Ohio. And out in Ohio, a few years ago, people were buying houses for $8,000, $10,000, $15,000. So when they came to us, we were able to raise, $100,000. They would request balance transfer checks from some of these banks. They would cash the check. They would acquire the property within 2 or 3 months. They'd sell it, pay back the money, or refinance it, and make a profit on the deal. So,
after the 18 months,
after the 0% interest period, the rates are going to vary between 8.9 to 16.9%. But what I explained was, if you use the accounts responsibly, you get balance transfer checks, and that's really where it's very valuable for real estate investors. Now you can use it like a checkbook fund, because now you have access to checks, to cash, to do whatever deals you want. And as long as you balance transfer the money back and forth between these accounts, you'll always only pay like 3% transfer fee, and then 0% for 8 months, 12 months, 15 months. So the biggest thing is just managing it responsibly, and then just building a really good relationship with that bank. So in a year from now, when you need more money, you could just tell the bank, "Hey, I need more money," and they're going to say, "Oh, sure, we'll give you another $10,000, $15,000. Here you go." We've gotten some business owners approved for up to $50,000 credit cards, up to $60,000 credit cards. So it just depends again on a few different variables.
And there are questions that people are typing in. So it's okay. So let's read through the questions that you guys asked. Someone just comment that they can't hear you.
And the way we got involved with this business, we were buying real estate too.
Okay, so the first question from Ty: can we pre-qualify with an existing LLC, then create a new LLC once we decide to open the credit?
Oh, yeah.
Okay.
So the question is, can we pre-qualify with an existing LLC and then create a new LLC once we decide to open the credit? So pretty much I think what the person's asking is, can they fill out the pre-qualification form, we give them a pre-approval, and then they can go ahead and go set up a new company that they're going to use to get the finance.
Yeah. So,
So yeah, if you do that, to answer that question, yeah, you can do that.
Okay. Next question. Do you have a recommendation which state to incorporate in if business will be done in Illinois?
I think it was just I would just incorporate it in Illinois.
Yeah, Illinois is expensive, man. I don't know.
It is for now. So yeah.
I think that's the question. Will one company always be pre-qualified by multiple banks so that the balance can be updatable?
Yeah. When a client gets pre-qualified, we don't take them to the banks yet. It's just for us to see. And then if they decide to move forward at that point, and they would need to fill out the full application, and then we would then get them the business credit cards, and then whichever company they use is where the balance, they're going to get the balance transfer check for.
Right. All right. From Jason D. Can you qualify if you're just starting your LLC and have no business history, since you don't use the self-port anymore?
Yes.
Yes. Yes, you can still qualify because we're going to use your personal credit to get you approved for business accounts. And then once those business accounts report to your business credit, that's how you're going to build business credit history. So that's how you really build it. Just like personal credit, when you're 18, you have to open up a few credit cards. You have to let them report. You have to use them, pay them back, use them, pay them back. It's the same concept for the business, for your business. You have to open up business accounts which are going to report to your business credit. So in the future, if you go to a bank, they're going to say, "Oh wow, you've already shown that you can use money to pay it back."
What's your success rate again?
It's usually over 70%. 70% success rate.
So yeah, no, I was just going to say, if the client doesn't qualify, we're not going to do them a disservice. Say, "Oh, we can do something for you," because we're in business, so we're not going to pay. So it's not going to pay. We're not going to pay.
My question is, in your company, once you establish credit, credit, your company purchase that bring up professional debt.
That's a good question for your accountant. I can't give you the exact answer for that, but
have you seen it done?
Yeah, a lot of people will do that. Sometimes.
If you want to repeat the question.
So the question is, if they could, what kind of personal debt? So the question was, if once we get them approved for business accounts, business credit cards, or business accounts, can they use that money to pay off some personal debt? I told them that that'd be a question you can ask your accountant. But have I seen it done? Yes. A lot of people will transfer the debt from their personal side to the business temporarily, and then pay it back out. So yeah, that's that.
All right.
Yeah.
What's the website or email address to get in contact with you? I will put it out there, at the end of the presentation.
Yeah, we'll send the link